Hey guys, this is Hardin Tate with Redwood Forex, and I want to do a little recap of this Aussie CAD trade that I did the other day. I ended up not pulling the trigger, and I canceled it before it ever came to my buy limit. And I canceled it for several reasons. First is what they call one of the crazy crosses. It's the Aussie versus the Canadian. So it's actually the Aussie dollar crossed with the U.S. Canadian dollar, and you end up getting this chart right here. Now, I took it because there was a pin bar at a very nice location, and I want to go into a little depth why I wanted it to do a pullback and then enter in the market doing a buy limit instead of taking the break of the bar and entering that way. So here's a live chart right now, and you can see as soon as the market opened the next day, it pretty much took right off. And that's what I was expecting it to do. I was expecting to take profit in this area around here. And the reason why I was saying in that area was for this very reason. If I put a line right here, and look at that, it actually lines up pretty nicely with the 1.45 big round number area. You have these highs here pointing, these opens and closes, another high, these low closes interacting with it, and this high. There was just a lot of interaction here, and I was expecting the market to react to it. But nonetheless, it made for 90 pips. Very good, nice little profit. But it took off right away, and I didn't want to enter in the market right away because the 1.04 big round number was right above it. So literally, like once this broke, it was 8 pips away, and I don't like to buy or sell into a big round number. It's not very logical because there could be a lot of sellers or buyers, people going in the opposite direction that you plan on going. So perhaps here there could have been enough sellers to bring it back down, which is why I wanted to get back in at the 1.35. So this would have limited my risk. Instead of risking 80 pips, I was only risking 50 pips. And because of that, I could have increased my leverage and still not risk more than 2% of my trade. Now once it broke, I was still thinking about maybe taking it when it got back to this area. There were several fib lines lining up in this area. I'll draw one right now just to show you. Like, look at that, the 50%, bam, lining right up with that 1.305. But since it had already made its move upwards, it had already tested out this area. So maybe I was thinking perhaps all the buyers were already taken out, and now sellers were going to step in control. Because it has had a very steady downtrend since the beginning of February. So the whole month of March has been going down. So it wouldn't be unreasonable to think that it would continue to go down once it hit its first little trouble area. And so, like I said, this is a combination of the Aussie dollar and the US Canadian. Both combined make that crazy cross of the Aussie Canadian. And I was looking at the Aussie dollar, and it had this bearish outside bar, which is a bearish signal, so downwards. And then I looked at the US Canadian, and I was realizing that it was about to run into this 1.0 area again. Big round number, 1.0. The biggest big round number you can get. It's parity. It's very important. And you can see all these little pin bars slashing right through it. And I knew that I was going to come back to this area, and I was thinking, okay, sellers are probably going to step back into this area. So I have the US CAD looking bearish, and then I have the Aussie dollar looking bearish. Combined, I get this chart, and I'm trying to buy. So I have both those pairs looking bearish. Why would I enter into a buy? Especially when there's other trades that might manifest that would have a way higher probability than this trade could ever have. So since it did make that initial push, if you had, I mean, this was a very good pin bar. You know, I really liked the location. That's why I did take off for a little bit. But like I said, you know, I was trying a different strategy of the buyback here. So I just wanted to go into greater depth with this trade, and you know why I even thought it was a good trade to begin with. So you know, you had the pin bar slash market went below this big round number, but was able to finish above it. We have this giant ascending trend line going all the way back since 2008. So it touched here, it touched here, it touched here, and then it touched here, which is where our pin bar had manifest. And then the other thing is there was divergence on the on the chart. And divergence is basically, right here I have an RSI, which is an oscillator that shows momentum. And basically all, sorry, forgot what I was talking about. All that divergence is that you have on the chart, you have the market making higher highs, but on the RSI it would make lower lows. So from here, if you draw a line, which is already here, that's why I kind of got jumped for a second, you can see this low is obviously lower than this higher low right here. If you draw that same exact line on the RSI from here to here, you can see 1, 2, 3. They're progressively getting lower and lower, but the market is actually moving higher and higher. So this is showing that the momentum that was bringing this down is now running out of steam. So all those three things combined: pin bar, price action bar through the big round number, fib line lining up right here. Also, if you drew it out a little bit, even from this point, it kind of intersected. So we had two fib lines lining up in the same area. See right here the 50 and 38.2 on that. And we also had divergence. So it made a lot of sense to try to enter in this trade. But once I saw how everything was reacting, I decided to get out and wait for a better opportunity on possibly another pair. So hopefully you were able to learn this, and please check out redwoodforex.com if you haven't. Thanks, have a great day.